we are looking for China's economy continue its V-shaped rebound in the second half of this year. So we're looking for real GDP at around 6% and even as high as 18% in the first quarter of 2021 due to a very favorable base effect. But consumption, it's one of the key dragging factors for China's recovery. The primary reason is that the pandemic indeed had a pretty material disruption, especially a damage to the household balance sheet. The overall labor market in China is still not yet back to the level before the pandemic, and not to talk about the still close to 20% of the fresh graduate unemployment rate. And therefore, consumption will likely to continue to recover relatively more slowly compared with investment, especially led by infrastructure investment. We need to, if we look at the government's fiscal stimulus, it's still very sizable, north of 10% of GDP. But only 30% of those resources were deployed in the first half of this year, leaving about 8 trillion renminbi or about 70% of the resources in the second half of this year. So with regards to exports, net exports turned positive in the second quarter, so it was a positive contributor to China growth. But there are also some risks for this factor to turn negative in the second half of this year. As you mentioned, exports has been doing quite well, but it has been led by a relatively niche sector, would be supplies related to the pandemic or medical supplies or computer hardware as people are working from home. But on the other hand, China will also likely to pick up in imports, especially from the U.S. So despite the delay of the phase one deal review, we still believe that both countries will be committed to the deal, and China will very likely pick up a pace more in terms of purchasing U.S. goods.
Okay, fair enough. But the data so far suggests that there has been a meaningful gap in that performance and underperformance coming in from China in meeting its end of the bargain. Do you see things changing in the run-up to the elections, or largely on the trade front, things will remain status quo?
If we confine the issues related to just trade, we believe the incentive for both the U.S. and China to keep the deal is still very high. After all, the deal is full of statements urging China to deliver either additional goods purchase or further opening up of the market. So both factors would be benefiting the U.S. economy, especially under the current downturn. So we see a relatively little reason for the U.S. to be walking away from the deal at the current moment. On the China side, as we are approaching the U.S. Presidential election, the risk for a intensifying geopolitical risk or intensifying tension is definitely on the rise. China's desire would still be trying to curb the potential outbreak or a further escalation of the tension, and therefore we don't feel China will be walking away from the deal. However, we do feel there are some possibility for China to try to tie up the deal with some other issues, given the recent development on Huawei, on TikTok, and on WeChat. So it's not impossible for China to be tying up some of the further commitment under the phase one deal to the other sectors outside of trade.